Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at the Harmony One token. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, as always, there will be donation links down below in the description. Feel free to support Ukraine, Ukraine's military, the refugees. All the links are from the official websites, so that has nothing to do with me personally. And if you have a problem with me trying to support my country, then don't leave any, stupid, meaningless comments, and just leave the channel and don't watch my videos. Simple as that. So that's pretty much it. Let's jump into the daily chart. So as you can see, Harmony One is coming all the way down to the golden ratio of our Fibonacci retracement. Now, if I zoom out to show you the Fibonacci retracements, swing high and swing low, which we did have set all the way back, like was it in June or May whenever I started covering Harmony One. So this Fibonacci retracement has been here for quite a while. So obviously the swing high March 25th, obviously the swing low June 24th. From there, we do have the 1.618 at almost 59 cents, I want to say. And we did have this large cup and handle pattern that did play out very nicely. We did hit our head on the 1.272 multiple times, which is sitting at 34.5 cents. And we did drop down from this symmetrical triangle over here, as you can see. So we landed on the golden ratio, which is great. So we've been holding this as support. We did bounce off of it back in September of last year, and we're bouncing off of it right now. We're even creating some sort of a inverse head and shoulders pattern here. Ignore the wick over there. And if I just bring out the trend line to set up so that's going to be the neckline, obviously, of our pattern. So once you break that neckline, let me just potentially give you the target that we're going to have. There we go. You start breaking that. So you're looking at around about 24 cents. I would say, a retracement to the first fib level is something that I would expect. Now, the golden ratio is sitting at 12 cents. 0.12390 is the exact number of the golden ratio of the Fibonacci level, the 0.618. So yeah, that's pretty much it for the support levels. I do think if we are going to enter a deeper correction, then I would look at the 0.5 Fibonacci support level at 10.5 cents. So have some potential, have some buy limit orders around those prices, but I don't see us going back at that low unless Bitcoin drops below like $35,000, something like that should happen in order for us to drop this low for Harmony One. But we'll see, maybe something's going to happen. Maybe we'll get a deeper pullback. Maybe we won't. And that's why you need to be ready for both outcomes. So if you're looking to swing trade, I would start looking at 1620 as your resistance level over here at the 786. So potentially this is where you want to take some profits. You sell there and you buy back in lower, like 5-7% lower. That's if you're going to be looking for some swing trades, because the 786 has rejected us twice over here. We did get above here slightly, but we actually ended up dropping back down. So the 786 is something that you want to target. Obviously, the more overextended the price is, the better it is and more safer it is to sell. So if you want to be even more safer, look for 22.5 cents, which is the swing high, which is the the first fib level, which is where we got rejected here twice with the previous all-time highs. So if you want to be a bit more safer, then obviously take some profits at 22.5 cents if that's what you're looking for, and then come, once you start getting closer to the 786, that's when you buy back in, and potentially that will be a very nice, that's around about 28%. So we could wait for a potential like 10%, discount and then buy back in, that would be a great swing trade in my opinion. Jumping into the daily RSI here. So you have this buy zone, the yellow rectangle here, anywhere from 36 to 33 on the index is a great buy in my opinion. So if you see the RSI come back down this low, potentially, buy some Harmony One tokens, because each time we've been in this zone, we've had a nice recovery to the upside. And the white trend line here is another support level that we managed to lose. So this can act as a resistance level if you're looking to swing trade, just look at the 47.5 on the index. That could potentially be your resistance level that could align with us, getting hit by the 786, right? If you run into the 786 on the RSI, you can run into the 47.5. So that's how you can look at the RSI alongside the price action. And obviously the pink trend line here is a very important resistance level that we have created on March 21st last year. We had another bounce in September, another bounce in October of last year, and you can even add in another resistance trend line over here. So something similar to this, right? You have multiple touches off of this trend line here. So this is something that you need to keep an eye on. Once you have a breakthrough from a horizontal resistance, you usually do that with authority and with force. So expect big moves after you start breaking either this white trend line or the pink trend line, because the pink trend line is the one that's suppressing us for the longer period of time. Now let's jump into the Binance website. Now, looking at the oscillators on the daily chart here, so you can see that we do have the Stochastic Rsi down here in the oversold. We're just getting the bullish cross here, so potentially this is where we're going to start bottoming out for the price action. The daily RSI, we've taken a look at the trading view chart. The MACD is getting overextended to the downside. As you can see, we had the bearish cross, I want to say, not the bullish cross, the bearish cross April 6th. From there, we had a downtrend, as you can see, April 6th. So confirmation of the downtrend, and from there we went even lower, 13%. So the MACD is a lagging indicator, a confirmation indicator, but it is an indicator, and it is used with all of these oscillators together. That's how you get the best results. Now, I do have a Fibonacci retracement set up here with the targets to the downside, and obviously this is the swing low here. You can see in the swing high over here on February 10th. The yellow rectangle represents a strong resistance level that we have been rejected from 3 times, more than 3 times actually, and that's on the 0.382 Fibonacci retracement at 17.5 cents. So the moving average, the 20 EMA, I want to say, is curling back down, and that is because the price action is far away below it. So once that happens, once there is a big gap in between the price action and the 20 EMA, you usually see a back test of support or a back test of resistance. In this case, a back test of resistance because we are below it. And the 20 EMA is currently sitting exactly where the golden ratio is at 14, at 0.1474. So that is a resistance level that we need to break through, back test it as support. That way we can look at another retracement to 23.5 cents. And if that doesn't happen, if we get rejected from the golden ratio, I would look at 13 cents as a buy order once again. And below that, I would look at, let me just give you that trend line. I would look at this support because that's where we bounced off of previously over here in March. I would look at 12 cents. And if you fail to hold that, obviously the first fib level here is always there to support you at 11 cents. So that is it for the daily chart. Let's jump into the weekly real quick to show you what's going on here. I'm going to remove the drawings. We don't need them. So a pretty big red candle here for the weekly chart, right? So we're down 25% in a week. And the week, it's Saturday, so the week is coming to a close. Obviously, if we open a candle below the 55 EMA, that is not going to be very good. We need to get back above the 55, open a candle in between that, and that's going to be pretty bullish in my opinion, because you're going to be consolidating in between the EMAs. But if we do close a candle over here, it is still not the end of the world, obviously, but you are going to get the EMAs closer together, which is bullish, which is always good. But like I said, yeah, if you're going to close below the 55, I would start having some buy orders at 11 to 12 cents for Harmony One, because I do think we're going to end up at those numbers if we close the week below the 55. So as you can see, the Stochastic Rsi is recovering on the weekly chart from the oversold. The relative strength index is in the middle, actually sitting on the index of 43, really doing nothing over here. And let's actually check if we have some divergences. No divergences right now. And the MACD on the weekly chart, as you can see, is getting pretty overextended to the downside. As you can see, the gap in between the moving average and the signal line is quite large. The bearish cross occurred on January 10th. So potentially, once we start the uptrend, look for the weekly MACD to have that confirmation bullish cross, and then you can be, more safe it would be more safe to enter. But that is pretty much it, guys. If I missed out anything on the charts, please let me know down below in the comment section. Feel free to follow me on Patreon. It's a great way to support me and a great way for you to get more exclusive content. We have low cap gem calls, personal technical analysis, market sentiment analysis, project reviews, and a whole bunch more stuff, guys. So if you want to get in touch with me, obviously there's Telegram, there's Twitter, we have a Discord server. All the links are down below in the description, and feel free to support Ukraine, guys. The donation links are in the description as well. That's pretty much it. I'm gonna catch you in the next one. Goodbye and good night.